Good afternoon. I'm with John Florek, the CEO of Emperor Metals. The symbol is AUOZ on the CSE, and Emperor has had a busy week with two news releases, and we're going to dive into it. We're going to talk about the drill results first. Uh, 21.7 meters of 7.2 grams per ton gold, and 24.8 meters of 1.8 grams per ton gold. Basically reported drill results for 2.5 holes. And hole 12, which was partial results, so we'll get more from this hole, was the highlight. 21.7 meters of 7.2 grams per ton gold. And that's inside of a broader interval of 38.3 meters of 4.1 grams per ton gold. So really exceptional high grade gold results, John. How are you feeling this morning?
I'm feeling great. The important thing to understand about that intercept is we have that conceptual open pit model that we talked about on your previous show. So the previous press releases were looking at, expanding the pit eastward. But within our conceptual open pit model, which is 1.8 kilometers long by 800 meters wide down to 400 feet, 400 meters deep, we put additional drill holes in areas that were poorly drilled. So there was an area, what's exciting about this 21.7 meters of 7.2 grams per ton, our models show that there was a lack of drilling. It was poorly drilled in the area. So we wanted to define it a bit more, do some infill drilling, because the drill hole spacing in that area is way over 100 meters. So we put a drill hole kind of in between. And the models that we created, all the drill holes that were coarsely spaced in the area, we're saying that, this is an area of about 1 gram per ton plus or minus half a gram. And so when we drilled it, we had significant upgrading of our model. So we were expecting 1.5 grams, and we get 21 meters of 7.2 grams per ton. So what it tells us is that when we start drilling this conceptual open pit, we start tightening up the drilling. Let's not forget the most important thing. We saw all sorts of visible gold. There's a picture of it in the press release. When we start tightening up basically the drilling in this conceptual open pit, there's a lot of upside because of the free gold in the system that we're seeing. So great opportunity to increase the grade and add ounces through, infill drilling on a deposit like this. And this is a big open pit. It's easy to mine. We can mine down to 0.3 grams per ton. So that was the excitement about this intercept.
So 2.5 holes are reported, and I want to draw the viewer and reader's attention to actually there's a lot of transparency in this company's news. I mean, they have broken down the drill results meter by meter, which you don't always see with some junior mining companies. So there's a lot of transparency here, and that is interesting about how you're seeing the grade rise in these holes that you reported. So actually the model will improve based upon the results of these three holes. And you still have quite a few holes to still report. And I want you to tell us about that. So only about a third of the total assays from the 2024 season have been published so far. So tell us about the rest of the results and what will be in those and when we'll get those, you think?
Yeah, so for the rest of the results, we reported about like 70% or so, plus or minus, of our drilling for 2024. We still have, so a lot of that has come in. We have a couple more holes in the open pit environment. And what we're trying to do, Robert, is it's strategic in what we're doing. These last few holes in the open pit environment, we're trying to add those incremental ounces because we're preparing for a mineral resource estimate update in Q1 of 2025. So what we want to do with other miners, other explorers on this property hasn't done is they didn't sample the host rock. And like mentioned before, we're seeing broad intervals, even within this last press release, of low-grade bulk tonnage material that is great for open pit mining. It adds those incremental ounces, improves the economics, and lowers the strip ratios for these type of deposits. So that's coming for the rest of our drilling. We have 19 holes total in 2024 that were drilled. But after that, we have 8,000 meters of historical core. And that historical core primarily is going through the racks and sampling that host rock that contains this incremental ore. So we can start building those inferred low-grade bulk tonnage ounces in our new mineral resource estimate. Because a conceptual open pit model, which defines like an economic zone for that open pit at 1650, at 1650 gold, it's just a concept, never included all this additional low-grade bulk tonnage gold. So we're excited to see what's going to happen when we include all this in a MRE in Q1 of 2025.
Yeah, so a lot of news flow slated for the next few months, including more drill results from the 2024 drilling, plus the assaying of the historical holes of 8,000 meters in total, and then maiden resource for the open pit model. And I think that the important thing to understand is that the drill results so far are showing higher grades, and that will improve the economics in theory of the deposit. And then we have this much higher gold price environment with gold. I mean, it's trading at 26.90 this morning. What gold price do you think that you'll use in the MRE, that'll be published in March?
Yeah, I mean, I think a lot of the people are using around $1,900 gold. We'll see what gold price does, but what we'll do is we'll always put sensitivities in there. So we'll show 1,900 base case, but then we'll show you at a price of what it looks like maybe at $2,300 gold, or maybe even at $1,600 gold. So I think that would probably be the most appropriate way to present it to investors, so they can see that, what does this look like with the sensitivities or fluctuations of gold price?
Okay. And before we talk about the new property acquisition and sort of the bigger neighborhood there in the Abitibi, how are you doing with your goals for 2024? I know you wanted to increase the thickness of the high grade lenses, you wanted to expand the existing zones, and you wanted to make new discoveries of some step out zones. Can you tell us about those priorities?
Yeah, I mean, our previous press releases, we expanded eastward and we saw those high grade intercepts over by the NIP zone and low grade bulk tonnage in between the NIP and basically our main conceptual open pit. And it showed these in the middle of basically no drilling, which had having some significant low grade bulk tonnage intercepts that need follow up. So we feel as though those satellite pits that you see in our figures, maybe we can start consolidating that a bit more in 2025 to really get a better visual of what the footprint of this deposit looks like. And so we're just doing basically what any miner would do. We're just trying to define the footprint of this deposit right now and focus mainly on the open pit environment. So we had a couple holes that pierced the underground environment because, as mentioned before, below this, this is virgin ground. And below this conceptual open pit model, we have a high grade underground gold deposit. And that was originally why we picked up the property. But, after seeing 25 meters of 1.69 grams per ton in the host rock, we quickly realized it was this big open pit potential above this envisioned high grade underground gold deposit. So that's kind of the strategy. I lost your voice You're on mute.
Oh yeah. On January 7th, you announced a property acquisition. And this is interesting because this is a project that is pretty high grade. It's about 4 grams per ton average grade. It looks like the total, resources are a little over 200,000 ounces in all categories. Why did you make this acquisition? What's the strategy here?
Well, yeah, that's a great question. One of my chairman of the board always says, hope is not a strategy. Obviously, the juniors have been lagging and the gold price has been going up. And, I don't like begging for money. We have a great project at Duquesne West. And so this was an opportunity. So what's great about this is another asset that de-risks Emperor. Okay, it's a dual asset. You always want to have a dual asset of some sort. You want to protect your investors at all costs. It's a great deal for both companies. Maritime, this deposit was an orphan because they're in the process of building an open pit in Newfoundland. So this was sort of an orphan. They weren't getting any market value for this. So I showed them Duquesne West. They really like the opportunity. They see the vision. They see the opportunity here at Duquesne West. So they wanted to become a significant shareholder. They know we're underpriced. So it's great to welcome them as a significant shareholder to Emperor. So we're excited about that. So they took a significant equity stake. Um, More importantly, like you said, it's 227,000 ounces, roughly historical indicated inferred. The 43-101 report was published in 2022, but it was never really posted. So um, when we were looking at this deposit, we saw that we could potentially double the size of this quite quickly. We looked at the models, we looked at the opportunity, and put this on a path towards like 1 million ounces. And not only that, this is in a pre-production stage. There's 3.3 kilometers of underground development. They did 2 bulk samples with a 96% recovery. Okay, so that was quite exciting. So it's all set up for mining. Basically, we just have to dewater. We have to do a gap study, figuring out what, we need permits for dewatering again. So when we go underground, we'll be, have to do some rehab for the underground because it's been underwater for 15 years. But other than that, we can, move forward towards mining. And it's nice. I mean, if we could just, from a deposit like this, if you just back of the envelope calculations, if you can mine 40,000 ounces per year at $25, basically, $2,500 an ounce, that's $100 million. If you toll mill it somewhere for, 35 to 50 bucks a ton, you're looking at about 15 to 20 million ounces of expenditures, and then maybe 35, $40 million of, contract mining. You're still left with 40 to $50 million of profit. You could use that money for additional acquisitions. You could use it to buy back some of our own shares, tighten up our share structure, which is pretty good as it is right now, and maybe even give a dividend to investors. In an environment like that, in this that we're in, we're not realizing any value as juniors. So we know we have value, so we may as well just mine it and make money. I know that's the vision.
Yeah, it's kind of interesting to think about this environment that we're in currently, where we have a very clear bull market in the gold price, whether it's priced in loonie or the Aussie dollar or the US dollar or the British pound. Gold is in a bull market against all these currencies. Um, Yet the value of gold assets, I guess assets that are uh, not permitted yet, so pre-permitted or non-operational assets are extremely low. I mean, you're picking up this project for pennies on the dollar. I see the strategy here. It's just very interesting to see how long is this going to last that companies are able to pick up these kind of gold assets. so cheap. John, tell us again, for those who are tuning in who don't know this area of Canada that well, uh, what's the neighborhood like? Who are your closest neighbors? And how many ounces of gold are in this area of Canada?
Yeah, well, 90% of the gold that has been produced in Canada came out of this district. It stretches all the way from Timmins to Val-d'Or, Kirkland Lake to Val-d'Or. There's these plumbing systems, so a lot of gold. Like at Duquesne West, I always say my neighbors have good projects too. So between us, First Mining, and the old Moneta, which is now Stellar Gold, there's 20 million ounces that are undeveloped, that are just sitting there. In the middle of all that is a Holt Holloway mine. They have a tailings dam, they have a mill that owned by an Eco. Like Lac Pelletier borders an Eco's Wasamac deposit, the one we just picked up. Our property borders their property. They're drilling that out. They're roughly around 3 million ounces. They plan on they have the same vision I have. Wasamac is envisioned as a satellite operation for supplemental feed to existing mills. Same thing. We border them. More importantly, Robert, just to the south of us, and a different structure than Wasamac and Lac Pelletier, is Urbo Resources. Just sold a deposit very similar to Lac Pelletier, like 250,000 ounces. They sold it to Lac Gold, an Australian company, for $25 million. Now we're only at $7 million market cap. Somebody bought something similar to Lac Pelletier for 25 million. So we should be at least 25 million. That's not even including what we have at Duquesne West. So we're highly undervalued. We have a lot of opportunity here. So yeah, it's pretty exciting.
Final question, maybe a little bit of a tough forward-looking question. What are your expectations for the MRE come March? I mean, we know we're currently sitting at 727,000 ounces at a grade of 5.2 grams per ton. What are we looking at?
Yeah, so my goal is to get a 50% increase in ounces from the limited amount of drilling that we did in 2023 and 2024. So I want to break that 1 million ounce hurdle. We know how important that is in regards to getting institutional investors involved. So it also gets more recognition once you break 1 million ounces in the market. So that's the goal. We think we can do that, no problem. And, think about the historical mineral resource of 727,000 ounces that we have in this property with an average grade of 5.42 grams per ton, with an average thickness of about 5.7 in the higher grade lenses. When you start thinking about that and you think about they calculated all that with a $960 gold price and gold's a lot higher, it's not hard to envision that, we're going to get there.
Very good. John Florek, thank you so much for your time this morning.
Yeah, thank you very much. Nice seeing you again, Robert. Bye.
Cheers.